Welcome to the StockMiner.com studios. I'm your StockMiner Brian Johnson, and we're about to enter another new week of trading. Just finishing options expiration week. A lot of times, actually every time, I will talk about the volatility that usually happens during options expiration. We didn't really see any of that this time around. A very, very slow grind up. I'll tell you what it did, though. It absolutely ate up anybody in a put position. The slow move all week with no real pullback at all to speak of was one I'm sure that was not expected at this point. I'm sure a lot of people jumped into puts last week thinking they can make a little bit of money on the downside when it fell, and it just never did. It stayed consistently, sideways to up all week long. So no real volatility, but just chewed up anybody in a put position last week. With that over with, the market can now continue with whatever the next direction of it will be. And of course, we are very extended up here. We'll continue to caution you against long positions for any great length of time. Be very cautious. Keep your stops in place. And just be careful from day to day if you're going to hold overnight. Make sure those positions are a situation where you can handle it if it turns against you the next morning in a violent manner. Until then, we're going to continue to watch the following levels, and that is, first of all, this blue line. This is the new Papa Smurf. We're going to continue to watch this, looking for breaks of this. Could mean we start our little pullback. I'm going to only consider it a pullback at this point, not a big crash. There are, I think, a lot of pundits out there looking for a move down towards the 1,000 mark. Could it happen? You bet it could happen. Absolutely. But at this point, I cannot, within my trading, allow myself to just believe that any break of this line will make us crash to, the 99.50 area or below in the Dow, and a big crash to 1,000 in the S&P. I must look at it as a pullback, and only a pullback at this point until levels are broken. Level to watch above you, 10,700. Level to watch below you, 10,450. It is pretty cut and dry right here within the markets themselves. I want to be very careful up in this area and very careful at this area here, looking for breaks of these areas. Keep in mind, now that we are above a lot of these moving averages, there's an extra support. I would say kind of an extra support line right down in this area. Between 10,300 and 10,370 should be good support, even on a break of 10,450. Do start to look for a little bit more of a pullback, though, if we can break those levels. Coming into the whenever part of the week, first part of the week, latter part of the week, whenever and however long it takes for them to get there. NASDAQ on a 60, also looking at this blue line, waiting for that to break as well. 1955 is where we close. I'm going to skip because this is pretty obvious, just waiting for that break. 1940-ish, maybe something starts to kind of add there. But the daily, look at this. Look at this incredible run-up by the NASDAQ. It has been very difficult not to make a little bit of money if you've been long the NASDAQ the last couple of weeks. Look at this. Very difficult not to make money that way. Getting very, very extended up here. Same rules apply. Watch your long positions. Doesn't mean don't go long. Just be very cautious if you are long. And make sure that you have a plan in place on where to take profits and how to take profits when you get there. Coming back into this 1920-ish, 1925-ish level, there should be still a level of support when we get back down to it. If we happen to break it, anything below 1900 starts to look right into the 1860-ish range. Right down in here, we are going to get, it appears, a big conglomeration of moving averages all at or around this 1860-ish area. So we will watch that closely on any breaks back below these areas, especially 1900. From a weekly perspective, though, looking good in the NASDAQ, and that is up and over this big line of resistance. Not only a firm break above it, but a pretty strong close above it with volume to boot. So we'll see if that can hold by the end of next week. I will be watching this closely to see if by the time we reach Friday, if we can hold this area up here on the NASDAQ. That could lead us into a little bit more of a bullish feeling within the markets themselves coming into the end of September. SPX on a 60-minute has already broken this little blue line that we've been watching. Keeping in mind, though, that as long as it allows itself to stay at this overhead resistance and base, there is a very good chance that we could see a bust to the upside, taking us up to retest some of these upper levels up in here. 1140-ish is one of my levels to watch, and then 1150. So we'll watch for those two levels first. Has not had the run that the NASDAQ has had. Nothing has, but doesn't mean that we can't push a little bit higher because the NASDAQ has already broken this area back here. This is where everybody's going to be screaming inverse head and shoulders. Man, I've probably heard that from, I don't know how many people these last few weeks, actually. This has been the big focus. Inverse head and shoulders. Is it valid? I think we'll find out. But until we get a really, really good, strong break above this and start heading up into this area here, I'm not sold on this quite yet. That's me speaking, all right? I am just not sold on this yet. I would watch and see if we can get up and over 1140-ish first to really start getting a little bit more bullish on the markets from a inverse head and shoulders type pattern. I'm just not sold on this yet. It's almost too pretty. So watch that very carefully coming into the early part of the week. What we have seen in the markets, guys, is nothing but crawl up, and it is up. But we saw this kind of back in here. Do you see that? That crawl up lasted for weeks at a time. But it didn't take long when the bears decided to take over to completely destroy all the work the bulls had done. They went from this area here all the way up to 1220, and the bears destroyed that in the matter of about 2 weeks. This wick right down here took us all the way back down here into the 1050-ish level, 1060-ish level. That is what happens in a strong bear market. So if the bears do decide to really take over here, based on what we've seen from the bulls, which has been really nothing, we could expect to see maybe some very large red candles leading us downwards if that selling pressure increases. VIX is still hanging out within this pattern we've been watching, kind of a falling wedge here. We're looking to see if it'll ever break that, but it has tons of room. It's in the middle. It can go down, which would mean a move up in the markets. It could go up, which would mean a move down in the markets. It's really in limbo. It has room to move both directions, so it's not giving us much of an indication at all for our trading. Let's just continue to see if it confirms what happens on a day-to-day basis within the markets themselves. Weekly doing the same thing, just kind of dribbling down here. Lots of room to move one way or the other. So no direction given to us from the VIX yet. Apple on a 60-minute. Look at this high, screaming run up. Now, Apple is definitely due for a huge pullback into the 255 range. Oh, wait. No, it's not. Don't be fooled, guys. This can continue its romp upwards. Watch that 280 move above us. This is an incredibly strong move. Is it due for a pullback? Absolutely, it's due for a pullback. Does it have to happen? No. Don't let your bias get in the way of what the charts are telling you. Best advice I can give you for the week. So, will Apple pull back? You know what? If the markets do, I really think it will too. It's time for Apple to rest. But it does not have to do that. Watch this 280 level above us. That's kind of the bigger area to really keep your eye on, I feel. And I think that'll give us maybe a good idea of future direction in Apple over the next, few weeks or whatever. But no reason to think that it can't run up more into earnings and into Christmas. So a pullback here would seem very likely and just a very plausible scenario for Apple. Let it pull back, maybe back here into this area or even back to these moving averages. That's a little deep, but anywhere back into the 260-ish range. In a perfect scenario, that would be good. That would allow it to breathe a little bit before setting up for the next push upwards, taking it into earnings in October, I think is when they report, and then into Christmas. That would then look very nice from our pattern we've been watching here. That is the run up, the big high base that we saw from April, and now maybe we get that push to the upside, completing what I think will be a 5-wave up in Apple, taking up as high as 300. maybe 300 plus by the time it's all over with. Gotta hold this area up here first, so we'll see if we get a little bit of a pullback this week, but do not expect it because it does not have to happen. Just play the charts. Breaks up and above here, still okay to go long Apple. FAS on a 60-minute also looks like it's putting in a little bit of a bull flag here. For the time being, until it breaks back below 2150, I like it. Actually, I'd say 21. Until it breaks below 21, I like it as a bull flag, and that is bullish. Breaks up above 2250 are your entries to the long side. Same thing here, holding and consolidating up here. FAZ then looking to play to the downside. This is more of a bear flag. Let's see if it holds here at this moving average and then starts its way down below 1280 for your short opportunity. Back into the 1220-ish area. Otherwise, back up above 1375 for long. Keep in mind, I would continue to only play these via the intraday. Holding overnight is kind of dangerous within these three-time ETFs, and I just don't think the pattern is there for it to be held overnight on an overnight basis, so it's up to you. Play it safely. I'll be back with you again when, of course, tomorrow night.